Hello, traders. Gary Wagner with the Gold Forecast here. Approximately 10:10 a.m. Tuesday, the 12th day of April in Honolulu, Hawaii, and this is the Daily Report. We have gold still under pressure this morning, currently trading down around $10 or $11, 14.52. It has had a low, as you can see, just above 14.40. We are looking at a daily chart. On that daily chart, we have created an extension, Elliott wave, and channel. But in this case, what we're going to want to do today is to look at our Fibonacci retracement so we can get a much more clear idea of where, in fact, we think this market might bottom. Now, the reason that I did leave this up this morning is for one reason, and that is when we look at the top of this wave one right here, carry it over, what you're going to find is that we have found, at least tentatively, some potential support right in this area. Also, if this market was to continue lower, it would actually break into the territory of this first wave, wave one. In essence, we would be starting all over again. Now, traders, all I have done is I have put up a couple of Fibonacci retracement areas, and I'm drawing a deep Fibonacci retracement from really the beginning of this rally or this entire impulse phase. The second one that I am drawing is going to be just this rally, in other words, wave three. So we have a total of two, and let me go ahead and blow that up for us so that you get a more clear idea of the areas that we are really looking at. And what you can see is as follows. The dotted line, of course, is this longer of the two, and I have just brought out 23 because obviously the other ones are below that. But as you can see, 23 takes us to 1436. So, traders, on the lowest end of this cycle, I don't think it's going to get there, but that would be the area to look at. More likely is going to be a 38% retracement of this last wave right in here, this component of this wave, because as I said, I believe that this wave is a complex wave that's going to consist of a 5 count. Now, when we do that, we have already surpassed that 23% level, and that's 1454 and then 1442. And you can see that accordingly right here, and of course, right here. Now, the interesting thing, quite obvious, is that the low happens to come right to that area. It's absolutely worth noting because if this does conclude this retracement right in here, this correction, this is a very, very good indicator because we did get the market finding support right in that area. Traders, we are looking at a daily chart with a Andrews pitchfork. I did get an email last night with one of our subscribers asking to see what it looked like because they felt that it might be interesting to take a look at. So here we are. And what I am finding interesting, obviously it is the channel line, first of all. Let me blow that up a little bit. But the channel line that I'm drawing very simply is from 3 data points. This low right here, which of course is the February low. This is the end of the retracement and the beginning of the impulse. And then these 2 target points. Now, what's interesting? Well, when we take a look at our handle, we can see that it's been absolutely following along this particular channel line right in here. And what we can see is that as it has come up, hits that channel line, it does move back down. You can see that here. And then once again, it did hit that top of the channel line. And so that in terms of following suit, there's absolutely no doubt, will in fact the market trend somewhere to this area here and then trade back up? Well, if it follows the suit, the same suit that it has been, there actually is that likelihood. So it's a very, very interesting scenario right now developing because it has actually not been able to break to the upper level of this channel line. And when I say the upper level, what I'm talking about is to have effective closes above this channel line. As you can see, the market did pretty much close in this area, but it opened below it and then traded lower. It has not really been able to take out that upper channel line, but at the same time has been tracking very, very nicely down this lower channel line, which is between the handle, of course, and the bottom here. So, no doubt, interesting information. And for the last chart of the day, we are looking at a 240-minute, a 4-hour candlestick chart in Henkin format. And so that what we can really see in this chart is what we call that minor count. So when we start from this bottom, and this is 1380, the beginning of the trend, this is wave one. Wave one had a 3 count to it, as you can see here. Then we have corrective wave 2, takes us to here. Now we have our wave number 3, which is our 1, 2, 3. This is 4 right in here. When this ends, we'll go into the 5th minor wave within the intermediate 3 count. Traders, what should we do? Well, we obviously got out at 1460, market's trading 1452. So it's below where we got out. We pulled a nice profit on the trade. My sentiment right now, as I said yesterday, I don't think the gold dust, so to speak, is quite settled. We might, in fact, be at the bottom, but in terms of my technical studies, I don't see bottom activity on the short term just yet. We might get that later on today, but we're going to hold tight. I am going to look to re-enter the market, re-enter it from the long side. I personally think on the fundamental basis, nothing's really changed, except there's been a good reason at these record tops for profit taking to ensue. So when you consider, we did have oil come way down. I think it's down about $5 today. We have the stock market under pressure. They are pulling profits pretty much across the board everywhere. So we see the entire complex, the investment complex, under pressure right now. Do I think that we've had fundamental changes in the market? As I've said, no. So my sentiment is we want to get back to this market. We want to get back on the long side. We'll wait for an appropriate time to do so. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily report. Bye-bye.